What's up everybody? Welcome to the Stocks channel. My name is Cory and today in the stock market we continue to see the pullback as we come into very strong support. Will we bounce and go back into a bull market from here? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today on SPY we were down 0.37%. And intraday, we did have a very volatile day. First starting out with new highs after the morning news, and then we did start to sell off for the rest of the day, closing right on top of that support level at 438. So from here, I just want to remind you what I'm expecting to see in the price action is a deep pullback back to these support levels, and then a continuation of the bull rally that should take us through April and possibly even May. So from here, in order for this bull rally to take place, we need to see these support levels holding up at 438 and 433.5 with the absolute last line of defense for the bulls down here at 428. If we lose this support level at 428, we are more than likely going to test brand new lows for the year, which does mean we will more than likely go fill that gap at SPY 400. Now, one thing I would caution you about is starting to get overly bearish until we lose support, because back here there was a lot of people that thought SPY was going to 400 and they completely missed this bullish rally because they were waiting for that to happen and it never actually happened. So when you're following price action, you need to have a strategy no matter where the price goes from here. And if you just think SPY is going straight down to 400 while we still have very strong support that we haven't yet closed below, then you could miss a bounce and you could miss a rally and you could miss another very impulsive bull rally from these support levels. So from here, we still do have a gap to fill right around 446, and we're getting a lot more bullish if SPY starts closing above this level at 445, and it's still possible we go right back into a bull trend from here. So if you look at this 50 EMA and you look at this 20 simple moving average, you can very clearly see that the 20 is over the 50. So now from here, we just need the 5 and the 13 to cross back over, and then we'll be in a sustainable bull rally, which means we're more than likely going to see price above that level and continuing to march higher. Obviously, we need to see the bullish breakout to have confirmation we're going into a bull trend, which will mean we need SPY back above 445 and 450. So if you want to be extra cautious, wait for the bullish breakouts before you get bullish. And if you're looking to short this market, continue to do so at resistance. So right now, the strong resistance is 445 and the strong support levels will be 438 and 433.5. Also, pay attention to the volume down here because we still haven't seen high volume panic selling, and this is very low volume for red days. That does mean there's a buyer strike, which is obviously apparent by the bearish sentiment that nobody wants to buy into the market right now. If that doesn't remind you of another point in history, I don't know what will, but when you get these buyer strikes, it doesn't take a whole lot of good news or a whole lot of buying before you get a very impulsive rally. So if we start to see an increase in volume and we start to see high volume selling, that is going to be extremely bearish, but so far we see relatively low volume. Even though we are getting red days, we are still holding up above critical support. So be very cautious if you're getting overly bearish because a lot of the retail crowd and a lot of the retail sentiment is still extremely bearish, and as we know, retail is typically wrong. So at this point, you're waiting for a major breakdown in support or a bullish breakout above 445 to know which direction SPY is going from here. We should be back into a full bull market the next time SPY is back above 462, and we'll be getting a lot more bullish above 450 and 457. On the NASDAQ 100 triple Qs, we were down 0.42% today, and just like SPY, we're going down on relatively low volume, and we still have one more critical support level that we could still test. So the bulls still have a chance to bounce off the support, and we still have a chance to get a bull rally going into the summer to make this zigzag pattern that could take us all the way up into the 390s. So from here, the triple Qs need to start closing back above 347 and 354 to start getting bullish. And if we lose this support level at 335, that will be incredibly bearish. So we're very close to strong support. So if we lose these levels as support and we start to get high volume selling, get a lot more cautious and expect to start seeing the triple Qs down there to close the gap at 315. However, as long as the triple Qs are holding above this support level and we see low volume selling, there is the real possibility we bounce and start closing some of these gaps to the upside, and those gaps are to the upside right around 349 and 360. The next time we close the gap at 360, we could be back into a bull trend and we'll be back above all the moving averages with the price action. So the triple Qs above 360 will be very bullish, and we won't be back into a full bull market until the triple Qs close above 371. So that is by far going to be the most critical resistance. So watch these very critical support levels because we're there right now. So you're going to know very soon if we see buyers coming in at these levels or we slice right down through them and start entering that bear market. On the Dow Jones, we were down 0.29% today, and the Dow Jones is getting very close to testing that critical support at 340, and we were only $1 away. As long as the Dow Jones can stay above 340, we're looking a lot more bullish. Otherwise, if we break below 340, you're looking for a retest of the support trend line right around 338. And below that, we'll be looking a lot more bearish with strong support down here at 333 and right around 330. Now, the bullish breakout from here will be a close back above 346 and then getting back out here above 350 with resistance at 353, 356, and a gap close at 360. So you'll notice that the Dow Jones and the triple Qs both have gaps to fill at 360, which is a lot more upside. And we don't know for sure those gaps are about to get filled in the near future, but we do know this gap has been open for over 2 months now, and there's usually only about 90 to 100 days until these types of gaps fill, so we could be filling that gap in the very near future. Otherwise, we should be slicing down through support and entering a bear market. So you're going to know very soon whether or not these critical support levels hold up. And if they do, we should start to see bullish breakouts. And then you will want to point your eyes up there to those price targets at the gap closes at 360. On the Russell 2000, we were up 0.32% today. And we can see the Russell 2000 is continuing to close around this very strong support level at 197. And we still haven't filled the gap at 195.7. So if the gap fills to the downside, we could find support from there and then start to bounce to go close the gap to the upside at 202.5. IWM is looking a lot more bullish if it can get back above 205, 208, and we should be in a full bull market in the small caps by the time IWM is back above 212. However, if we lose support at 195 and we break down below 193 and 191, we're very likely continuing into a bear market with a price target all the way down there at 170. So watch these very critical support levels and look for those bullish breakouts. Otherwise, continue to expect a very volatile and choppy market until we see a decisive breakout in either direction. On the ARKK ETF, we were flat on the day, going absolutely nowhere, and the ARKK ETF is very clearly still in a bear market with a very clear gap to fill at 54.7, but we also do have a gap to fill to the upside right around 66.5. ARKK is very simple because you shouldn't be getting bullish on it until it gets back above 71, and it has yet to do that, so there's no reason to be bullish on this ETF. If it can start getting bullish breakouts, we can change our mind about that, but for now, with the strong bear trend, I would continue to expect ARKK to continue to trend lower down towards 54.7 or at least get rejected at the gap close and resistance right around 67 before continuing lower. On the VIX, we were down 0.37% today, but the VIX did close back above 24 for the second day in a row, and you can see that we are losing the bear trend in the VIX, so this is definitely something that you don't want to ignore. While volatility is rising and the VIX is continuing to go higher, we do have the increased probability for panic selling, which means the VIX could spike back into the 30s as we get a waterfall wave of selling. That should go hand in hand with price action breaking down through those critical support levels. So watch the VIX and watch those critical support levels. Right now, you need to be cautious, but the VIX will be looking a lot more bullish if it starts closing below 24, and we should be back into the full bull market the next time the VIX closes below 20. On Bitcoin, we're currently flat, going absolutely nowhere, and we're still below the lower Bollinger Band for the second day in a row, and we are losing that bull trend. Remember, Bitcoin below 42,000 is increased probability chance we're coming back down to 37,000, and if we lose support at 37,000, you're looking for a retest of 30,000. You can get more bullish on a break above 42 to 43,000. Otherwise, remain cautious and prepare to see a retest of support at 37,000 unless we start breaking back above 42 to 43,000. On NVDA stock, we were down 1.88% today, and NVIDIA is still looking very weak, but still testing this breakout level as support right around 214. And that level is decreasing each and every day because it is a negative slope. From here, it looks very likely that we're going down to retest 210 to 209, and that level has been a very strong support level. If that level fails, you're looking for a retest of 197. However, if that level does bounce, you're looking for the gap fills above at 230 and 258. And we're not getting bullish on NVIDIA until it starts closing back above the 50 EMA, which is now at 251. So even though we're not bullish, that doesn't mean we can't bounce from here and go higher. So there is still long trades and great risk reward trade setups off of these support levels. But just don't get overly bullish and try to swing trade NVIDIA if it's going into a bear trend, because we could still break down and go much lower. So in the short term, we're likely to bounce off support and start closing some of these upside gaps. So look for resistance at 223, 230, 244, and 251. And if we break above 251, it should be a quick trip to close the gap at 258. On Tesla stock, we were up 1.13% today, so Tesla is holding above that critical support at 965. However, it did get rejected at resistance at 996. It looks like we're very close to fully closing that gap at 1021, and that level did act as resistance, which is going to be a bearish indication, but we still do have a gap at 1087. So as long as Tesla can hold support at 965 and break out back above 1000, we could run up there to go close that gap at 1087. even though we will have resistance at 1021 and 1065. If we lose support at 965, we'll very likely lose the bullish momentum and the bull trend, and we will have support down here at 937 and 928. So you're getting a lot more bullish above 1021 and a lot more cautious below 965. On Apple stock, we were up 1.15% today, and Apple did bounce off of that support level around 166, but we did get rejected at resistance at 168 and failed to close back above the 50 EMA, so we are losing the bull trend. As long as Apple can stay above this support trend line or hold above the breakout level right around 165, it's still possible that we still bounce and go up to that new all-time high price target at 188, but we need to be a lot more cautious below 168. So we're getting a lot more bullish back above 168 with resistance at 171 and the full gap close at 174. And if we can get above that gap close and break out above 176, we will very likely enter the bull market that will take Apple to brand new all-time highs. Now to the downside, if we lose support at 166 and 165, you're looking for very critical support at 162, and below that we will likely see Apple starting to look bearish, which means we could be heading all the way back down to 157 to 150. On the financial sector, we were down 1.09% today, and we are closing below our very strong support, but we still are holding up above our support trend line, and we do have bank earnings starting tomorrow morning. So bank earnings are going to be the catalyst of whether or not we break out of this wedge to the upside or the downside. So watch the earnings and watch the price action. And if we get back over the 50 EMA, we will be looking very bullish and we'll likely see the bullish breakout. On the industrial sector, we were down 0.16% today, and we continue to see weak price action in the industrials, but so far we're still holding up above support. If we can get back over the 50 EMA, look for the gap close at 106. On the healthcare sector, we were down about 1% today, and we still have the bull trend, and the price action is coming back down to our support trend line. So we had the bullish breakout, and we still have bullish buying volume in a bull trend, so there's no reason to get bearish on the healthcare sector unless it starts closing back below the 20 simple moving average. On the energy sector, we were up 1.66% today, and the energy sector continues to look bullish with bullish price action in a bull trend. However, we did get rejected from the previous high, so watch that level very closely. So jumping back over to the S&P 500, as you can tell from the price action, we are definitely continuing into this pullback, but we're coming into very strong support, and retail bearish sentiment is at all-time highs. When you get everybody in the room that's bearish and everybody is agreeing with each other that they think the stock market should be going lower, it is more often than not probably not going to occur. So if everybody around you is getting bearish and that's making you feel better, you should reconsider and consider being a contrarian as you come into very strong support. If price action breaks down below strong support, then becoming bearish will make a lot more sense, but right now we are still sitting on top of critical support, and so far the level is still holding up. Also, don't forget that I have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF TQQQ and sends all of your buy and sell alerts directly via email and text message. With all of this market volatility, I think now is the best time to be a bank member. You can find out more information and learn how to subscribe by clicking on the link in the description of the video. I also have the Stocks Channel Discord where I'm doing intraday updates and analysis and bringing new trade ideas to you weekly, and right now there are a ton of brand new trade ideas. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join the Discord server by clicking on the link below. So thanks for watching, everybody. I hope you are crushing this market, and as always, I will see you in the next episode.